You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CMEGROUP, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CMEGROUP, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break it all down on the futures options side of the fence. So we'll talk some commodities, maybe some ag, some metals, some energy, get into the equities quite a bit, especially a day like today with so much popping off over there, the rates and everything else, a whole bunch more. You got to tune in every week to see what's on our movers and shakers, what's lighting up our tape over here, what's going to make it on the show this week. Of course, if you like what you hear, and we see so many new people flocking to the network these days, make sure you keep those reviews coming so new folks can continue to discover not just TWIFO, but the entire network over there. And of course, we do love to hear from you guys, so keep those questions coming. We do like to hear your questions, your comments, your insights, your pearls of wisdom, not just for us, but to share with your fellow listeners out there. Let's see who else we're going to hear from on the program today. First, let's go out to the FTSE Russell hot seat, where we are joined once again by my compatriot here in all things futures options crime, Mr. Sean Smith, the Managing Director of Derivatives Licensing in FTSE Russell land. Mr. Smith, welcome back to TWIFO, sir.
Hey, Mark. It's great to be back on the show. Thanks for having me. Once again, we're going to have a great show today, and I'm looking forward to having a fun conversation.
Should be a fun one. And also joining us, holding down the CME Group hot seat today, it's been a little while since he's been on, Mr. Tim McCourt, the Managing Director and Global Head of Equity Products over there at CME. Tim, welcome back to TWIFO, sir. It has been too long.
Hey, Mark. Yeah, great to be back. Thanks for having me. Hope you're doing well. Sean, great to hear your voice. Looking forward to a great show today.
Well, Tim, I'm not sure if you're aware, but the world has had some turmoil since the last time we chatted. So let's catch us up really quickly. How are you and everybody in the equity team? How are you guys holding up over there at CME right now?
Yeah, everyone's holding up great. Thanks for asking. The team's doing well. We've actually even had a few people join us during this work from home environment. So the team is good and continues to crank out new products. So all is well in CME land. Hope it all is well by you guys.
Growing the team. I like to hear that in these otherwise dire times. Someone out there is hiring. So if you like equities, maybe hit up Tim over there at CME. Maybe they can add you to the team. And Tim, I usually give Sean this duty, but you're our guest today, so you get pride of place here. Where should we begin on our movers and shakers journey this week? To the light side or to the dark side, sir?
Let's go to the light side today. Let's go to the light side.
I can see why you and Sean are of like minds. By the way, listeners, if you guys want to play the home game for yourself, not just listen to the show, but actually generate your own reports, you know where to go. CMEGROUP.com/TWIFO, TWIFO, or /TWIO, TWIO. They both should work this week in futures options or this week in options. Pick your poison. Head on over there. You could generate reports, not just for what we talk about on the show, but for whatever strikes your fancy. If you want to do lumber at 2 a.m., you could do it. Not going to be a lot of options contracts there, but you can do it. So head on over there, CMEGROUP.com/TWIFO or /TWIO to begin your journey on that front. As we begin our journey here, a mixed week, even though coming into today, you may not think that. The equity markets are getting annihilated out there, but we'll get to that in a little bit out there. Net on the week, actually, from our last show, it's a very split market. It's almost even between the upside movers and the downside movers. If you wait a little bit, maybe that might shake out a little bit more in favor of the red. But coming into showtime, that's where we were. And to the light side, let's see. Number 5 on our upside movers this week over there in CME land, soybean meal, up 2.61%. Number 4, the old euro dollar, back in the top 5, up 3.09%. It was number 1 to the dark side last week. It was off 6 and about 2/3% last week. So a bit of a rebound here in euro dollars land. The ultra bond, number 3, up 3.16%. Then we've got numero dos here, lean hogs, up almost 5.5% here. And number 1 with the bullet this week, palladium, up 8.19%. Now before you say, hey, let's break down some palladium, we already did. There were 13 contracts on the tape as of showtime, so not a lot going on from an option skew or volume or volatility perspective out there in palladium. So let's go to the dark side. Let's see what we got lighting up there as well. A lot of energy on the dark side this week. Spoiler, listeners. Number 5, Brent, off 5.06%. Number 4, our old friend WTI, off just a tick, under 6%, 5.99%. Then numero trace here in Nat Gas, off 6.94, almost 7% here for Nat Gas. Heating oil, number 2 to the dark side, off 7.15%. Last week, it was number 5 on our dark side list, off nearly 3.5%. That means number 1 with the bullet, we're going to the softs, actually. It's our only non-energy on the dark side list this week. Lumber, off 15.64%. And once again, before you ask, hey, let's get lumber into the rotation, 176 contracts on the tape as of showtime. So unfortunately, I don't think we'll be hanging our hat in lumber this week as well. Where we will be hanging our hat, though, before we dive into all this fun stuff, is the numbers hot off the presses from CME for August. We just broke down the numbers from OCC on our option block show a little while ago. Now let's break down what's coming in from CME land. Obviously, August was a pretty hot and heavy month across the board, no matter where you're looking. CME had an average daily volume of 16.4 million contracts, and OI at the end of August, 101 million contracts. Let's drill down a little bit, though, to where we like to hang our hats. Of course, the options. The options ADV was a little bit north of 2 million, about 2.1 million contracts here in August. Let's break down some of the complexes here really quickly. These are obviously adding together futures and options, so total contract ADV now. Listeners, interest rates obviously leading the dance, 7.2 million contract ADV. This is just for August now. Equity index, they had an ADV of 4.1 million, so ADV in the equity land, hot and heavy, number 2. Energy coming in at number 3, 1.9 million contracts ADV. Number 4, ags, about 1.4 million. Metals, pretty much exactly a million contracts for ADV. And then FX at 729,000. A couple other highlights coming out of August here. The record metals total ADV is up 15% from a year ago. Obviously, the big run up to 2,000 in gold and the commensurate move in silver driving a lot of that. Of course, silver futures lighting it up. They had a record ADV of 221,000. That's up 61% from a year ago. Micro gold futures, so the little ones, also had an ADV of 194,000. That's up a whopping 380% from August of last year. Obviously, those are a little bit newer addition to the pantheon there. Micro silver futures, same deal, ADV 34,000 contracts, up 1,000% from August of a year ago. The 3-year note, 13,400 contracts. That was their record volume. That was on August 31st. Let's get into the equities land as well. Micro E-mini equity futures ADV up 72% from a year ago. And the options on the Micro E-mini and Micro E-mini NASDAQ. Of course, we're going to talk about those in a little bit. They launched just a little while ago, August 31st, did a combined almost 2,000 contracts on the first day. So a lot of places to parse. So since we're hitting on equities, let's start there. Tim, obviously a tumultuous time to be looking at equities. Just in the lens of today, most of the major indices are firmly in the blood red territory today. We've got NASDAQ off nearly 5%. We've got S&P off about 3.5%. Dow off about 2.75%. And the Russell 2000 was off a similar percentage coming into showtime. So a lot to unpack there. Obviously, a lot of new products have been hitting your tape as well. What's been lighting up your tape there in the equities team over there at CME of late, Tim?
Yeah, it's a great question. Certainly today, market a little bit to the downside, to say the least. But, I think the last few weeks, in the last few months, we've seen continued great growth in the equity complex at CMEGROUP. And Mark, I think what you had mentioned, one of the things we're really proud of is the continued success of the micro E-mini futures. Even just looking at August, which is a little bit of a slower month compared to other months for equity, still delivering quite outstanding numbers in the micro E-minis, with the S&P trading over 700,000, the NASDAQ trading over 600,000, and then the Dow trading about 70,000 in August, and then Russell 2000 trading 75,000, out trading the Russell. Russell out trading the Dow in the month of August in ADV terms, which has been great to see. I think this really speaks to the need in the marketplace for the smaller right-sized contract, especially like days today when the market's moving. It helps both the active individual and the professional traders, the institutions. There's a lot of risk moving around. Being more precise is always a great risk management tool. And we're really pleased to announce launch the options earlier this week on Monday. It's been a great first week for micro E-mini options, and we're really pleased with the progress so far.
Yeah, well, I'm glad to see they're finally listed. I think when you first announced them to us over a year ago here on the show, Tim, my second question was, when were you going to see the options? Obviously, we had to wait a little bit, but the futures clearly a home run, and now the options sound like they're faring pretty well as well. How are they lining up compared to your expectations so far, Tim?
Yeah, it's certainly, doing better than my expectations. I think as many of you know, and maybe some of the listeners out there don't know, it's always more challenging to launch option products than futures products. And just when you think about it, there's many more actual products associated with options. When we launch futures, it's just the index. It's one contract per delivery month, and it's a linear product. But when we look at the options on the micro E-mini options on the S&P and the NASDAQ 100, there are 10 maturities per index, with literally, hundreds of strikes per maturity. So the permutations of getting all those markets lit up for all the traders out there is a much more larger lift on the option side. So the fact that we've gotten here through this week with, I think we're doing about 15 to 16,000 contracts so far this week, right about now. The volume growing, where yesterday the volume was more than triple the first day volume, which is always great to see. A few thousand, I think just under 8,000 contracts of OI as of last night. These are all great things. We're also getting around-the-clock trading and quoting. So all the building blocks are there. And then the next step is just continue to work with folks and educate the market and get them used to all the great benefits of micro E-mini options, just as they've learned on our other E-mini options and our micro E-mini futures.
Well, it's funny you mentioned the building blocks because, the equity side of the business, they tried to do this years ago, very infamously, with some of the big names back in their original. They split again now, but back before Apple split the first time and others, a lot of brokers were lamenting, hey, these things are too expensive to trade options on, so they tried to create mini options that were 1/10 the size, and there was a lot of issues inherent with that. The brokers tried to charge full freight, which caused problems with a much smaller contract, obviously. The market makers never really got on board, so the spreads were wide. There were a bunch of inherent issues that kind of combined to really, even though the industry seemed like they were very excited about the product, it kind of cratered and crashed and burned very quickly after launch. Sounds like, Tim, you mentioned the building blocks there. It sounds like you're not seeing those same issues on the micro E-mini option side here.
Yeah, no, not yet. I think there's certain unique benefits that are always present on the futures side of the fence here, on options on futures and futures themselves. And I think that's certainly what we're seeing here, the benefits of around-the-clock trading, the capital efficiency, the fact that it does deliver into the micro E-mini futures. These are all great product features, and the market structure of, what CME provides around the equity indices. These are all some of the best liquidity pools out there in the ecosystem. So it's been really kind of smooth sailing the first few days. We haven't had some of those problems that you've talked about that may have plagued previous endeavors on smaller size contracts more on the security side. But it's been great. The feedback from customers has been great. The feedback from our liquidity providers has been great. And I will say the other thing that I'm really proud of with this initiative is when we look at what the team at CME, what the sales force has done, what our marketing has done, what our index provider partners have done, to be able to pull this off in this extended and this unique work-from-home environment is really a testament to CME coming together to deliver what the marketplace wants. And it's been a lot of fun, but I'm really proud of the team involved in here, and hats off to everyone out there listening that was involved in this launch, both inside and outside the CME. It's been great to see this come to market, given the circumstances we're operating under.
Of course, it helps. You guys also had the added benefit of an underlying future that was actually trading and trading for size, unlike the equity flavors that they tried to launch out there. So that certainly helps get the ball rolling, Tim, when the futures are printing a lot of size ahead of time.
Absolutely. Launching options on the most successful product in CME Group's history certainly gives us a leg up as well. And that's a feature needed for all of the options on futures markets. You want that robust underlying market to be able to support the delta hedging and the risk management of the options. And it's something where, we're also just thoughtful of in terms of we don't want to overwhelm the market either. In terms of digesting option products, it does take more resources. And given the velocity of the underlying market, that's why we started with the S&P 500 and the NASDAQ, given their volumes on the micro E-mini futures, but certainly engaging with customers and continuing to evaluate if it makes sense to also look at the Dow and the Russell too, which the micros have been doing fantastic. So the underlying future certainly helps. We always have to balance that, the popularity and the use of the underlying future, but just making sure we roll things out in a prudent way to make sure they are successful, and we don't want to overwhelm people at the same time, particularly on the option front.
I think the vol could be certainly overwhelming people today, Sean. A lot of things popping off across the equity space, not just in small cap land. Coming into showtime, the VIX was at about 32. Who knows where it is right now? It's moving quite a bit out there today. That puts it up 7 handles from where it was this time last week. The VVIX, which is the volatility of volatility, is at a little north of 130, about 130 and a quarter coming into showtime. Puts it up nearly 14 handles from this time last week. Remember, we like to use that 120 level as a barometer for, you get north of that, things are getting pretty frosty. Things are starting to move, and we're certainly well north of that right now. RVX, which is the VIX of the Russell 2000, that was up 7 and a quarter points from last show. It was about 37 and a half coming into showtime, as we're seeing net on the week right now. We're seeing Russell 2000 off nearly 2%, about 1.8% here. And of course, that spread, that VIX RVX spread, so the spread between small cap vol and large cap vol, it was widening out early this morning. Now it's starting to tighten up a little bit. It's about 5.5 points. That puts it nearly a full point tighter than where it was last week, but these indexes are swinging around so much right now. It's kind of pick your poison, flip a coin of where it is at any given moment. So, Sean, obviously a lot has been popping off this week in the equity vol space. What's been lighting up your tape in small cap land this week, sir?
Thanks, Mark. And Tim, right back at you. It's great to hear your voice, and congratulations on the launch of the micro options. Very, very exciting. Great numbers coming out of the gate. I just wanted to add before I start talking about Russell and RVX and VIX and things, but something else the CME does extremely well with a product launch is one, they really gauge client demand in a very, very fantastic way, so that they're solving for and answering clients that are asking for various products to hedge risk, to equitize, to take a stand in the marketplace, all those things that derivatives are meant for in a retail and an institutional environment. And the CME does that extremely well. But one of the key things CME does extremely well as they're launching a product is education they educate the market as to what these products are. And as Tim said, yeah, they're really complex. They're not linear. There's lots of expiration dates. There's lots of strikes. There's calls. There's puts. So there's a lot of different things that options are that futures aren't and are derivatives of. So there's a real curve of education that needs to take place, and the CME just does that in just a fantastic way with their sales force, with their education department. They educate Russell. They educate my sales force, which is my hats off to CME for doing that as well. So there's this great collaboration between the index provider and our partner CME, and I couldn't be more excited to see this success. So congratulations, Tim. So yeah, RVX and VIX. Small. Oh, go ahead, Tim. You want to say something?
No, just saying thank you. If you could see my face, I'd be blushing. Great accolades. Appreciate the kind words. And really appreciate it. Thank you.
Oh, you're more than welcome, as you very well know. The small caps are more volatile, so that spread's going to tighten. But after today, you might see large caps getting a little more volatile, but small caps are going to catch up, as we know. I always like to say outperform to the downside, but then when the economy picks up, they outperform to the upside as well. And, this has been an interesting year of performance in large caps and small caps, right? Since, not including today, but just in the last 2 days, the Russell 1000 was up 2%, and up 18% in the last 3 months. Those are huge numbers. Russell 2000, our small cap index in the last 3 months has rallied 14%. And year to date, still down. It's still the laggard of the indices, but up a whopping 8% since January. So we've got movement. We've got move to the upside. There's lots of discussion about stimulating small businesses, which bode well for the Russell 2000. So from a trading perspective, there's probably some great opportunities. And with the CME Russell futures and CME Russell options, you've got some great products in order that you can have to take advantage of those indexes on the derivative side. So interesting times, and we're coming into an election season. Actually, we're in the election season, so just put your seatbelt on.
Speaking of fostering small businesses and small caps, sounds like we need a little bit of that out there, Sean. A listener sent us this earlier this week. Obviously, these valuations are moving. We haven't had a chance to independently confirm this, and it's probably lower now given today's big sell-off. But at the time they sent us, they said Apple at the time had a larger market cap, about $2.26 trillion, than the entire Russell 2000, which, if that's true, Sean, probably a little bit terrifying. Wouldn't you agree?
Well, there's large cap indexes and there's large cap stocks, and then there's small cap stocks and small cap indexes. I remember during recon the big getting bigger and the smaller getting smaller was a kind of a headline between our reconstitution of those indexes. So I'm not too surprised, but there's a huge gap between the largest large caps and the smallest small caps, right? I think the small cap still has a market cap of under $100 million for the first time in more than a decade, if I recall my statistics. So really interesting tidbit one of your listeners sent today.
We
really
have keen-eared and keen-eyed listeners here, Sean. A terrifying statistic, if that is indeed true. And I don't have any opportunity to doubt our listeners. Maybe a sign of an economy getting a little bit top-heavy, perhaps, out there, if that is indeed the case. Let's see what's the case right now in Russell 2000 land. Coming into showtime, like I said, it was off about 1.8% here net on the week. And the action is primarily aggregated, about 40% of it out there in the SEP contract with about 1675 calls. So a rare week, Sean, where it's upside calls. We're at about a 1547 right now, listeners, for where the futures are right now. 1675. So out of the money call dominating the tape out here throughout the week, which is kind of interesting. I would have guessed maybe, especially given today's activity. Usually we see far out of the money puts dominating the tape in the Russell 2000. This week, out of the money call. And let's look really quickly at the skew. Obviously, puts are getting frothy, probably a little bit frothier right now. They were 10.6% rich to the at-the-money last week. This week, 12.1% rich, so getting bid up, no surprise there. The calls, 7% cheap. This week, nearly 10% cheap, so calls are maybe a bargain out there in small caps out there right now. At-the-money vol in that SEP contract, 31 and change out there. That's up 8.5 points from this time last week. A lot to parse. But since we're talking volatility in the equity space, there's so much going on in the equities. You can probably spend the rest of the show on this, but I want to get to Tim. You haven't just been launching these micro contracts. No. You've been up to a few other things up your sleeve as well, including the forthcoming addition to a new offering in the equity space. In fact, a volatility offering on the equity side out here, a NASDAQ 100 vol product out here. So walk us through the VOLQ, why you guys decided to add this offering to the equity stable now, sir.
Yeah, it's a great question. We were excited to launch or announce the launch of VOLQ futures on October 5th. And Mark, as you say, these are futures on the NASDAQ 100 Volatility Index, also known as the VOLQ Index. And we're really excited about it. I mean, when we look at the marketplace, certainly equity has been on fire this year in terms of volatility and volumes. But the NASDAQ the last few years continues to be a very interesting story, just kind of like what you guys were just talking about with respect to Apple. The impact of these kind of story stocks on the NASDAQ versus something like the S&P 500. There's different weights. There's different component contributions. So introducing volatility products on the NASDAQ, I think this is a great backdrop here in 2020 to be able to do that, to give the marketplace the ability to expressly trade the implied volatility of the NASDAQ 100 as a tradable parameter. I think it's going to be a lot of fun for folks and certainly much needed in the marketplace. What's interesting, though, about VOLQ is it's specifically designed at the money. So it tracks the forward volatility from an at-the-money perspective, where the index is constructed of 32 options on the NASDAQ Cash Index options that trade the PHLX. And it's the first two in the money and out of the money puts and calls across the four nearest weekly expirations. So you have these 32 options that underlie the VOLQ that will be used to calculate the implied volatility of a precisely at-the-money option, which is great. So these will be monthly contracts. We're launching on October 5th, where we'll have the October, November, and December contracts in the market, and we're super excited about it. The contract multiplier is going to be $1,000, so a relatively reasonably sized contract, and the value of a tick will be $50. So I think plenty of opportunity for all of our volatility-minded traders out there to trade it alongside the other volatility products, either spreading them or outright, or trade complementary to all the other existing products people are trading. It's going to be a lot of fun with this one. No rest for the weary for the equity team at CME, though. Micros this week, and then VOLQ in October.
Yeah, you guys are going to be hogging the CME hot seat here on the show for the time being. You guys got to slow down the product roll, Tim, then you can take a break.
All right, we'll work on dialing it back a little bit to give some others a chance in the hot seat. I love the limelight, Mark. You know that.
The ag and the energy guys are going to get jealous here. They're going to try to muscle you aside on the hot seat. Speaking of interesting stuff on the vol front here, Eric Norland, we love to have him on the show as well. A lot of great research he does over there. He just happened to crunch some of the numbers, as he is wont to do, comparing NASDAQ versus S&P 500 vol. I encourage you to check it out for yourselves, listeners, over there, CMEGROUP.com. All of Eric's stuff is usually on the homepage. You can see it pretty easily once you head on over there. This one's called NASDAQ 100 S&P 500 Volatility Ratio at Peak Levels. And as always, it's a very epic treatise full of great visuals. I encourage you, again, check it out for yourselves. Some of the interesting takeaways over here, NASDAQ 100 options, in his view, have decoupled from S&P 500 options. And certainly if you've been watching the comparative performances of these indices over the past few months, that probably shouldn't come as a surprise to you. NASDAQ has been moving just in exaggerated form compared to most other indices outside of maybe small caps out there, certainly compared to the S&P. Every given day, whatever the move is, usually S&P is the Goldilocks and NASDAQ is the outlier to the upside or to the downside, at least compared to those two indexes. NASDAQ 100 led the equity indices higher, much as it did during the 90s. A lot of this analysis goes back to the dot-com boom back in the late 90s there. And he's also saying, obviously, the increased demand for tech shares is leading to this increased demand for NASDAQ options, hence some of the premium we're seeing out there. Also, he thinks some of the premium he's finding out there in NASDAQ 100 options, probably maybe some of the memories of the old dot-com bubble bursting, a.k.a. the tech wreck, maybe some of that priced in there as well. And he also mentions that credit spreads and volatility have not returned to previous lows, even though NASDAQ, until today, had pretty much been trending to new highs pretty much just about every session but we haven't seen the vol come in. We've seen that in the S&P and most other equity indices as well. The vol still remains firm even before today, as we saw a lot of other looming events on the horizon, like the election and everything else, really contributing and conspiring to keep the vol a little bit firmer. So, Tim, it sounds like Eric is on board with the notion that there may be a need for a NASDAQ volatility product coming down the road there, Tim.
Sounds like it. It's like he's reading my mind. No, yeah, these are all some of the exact great points of why it's a perfect time to introduce something specifically on the NASDAQ 100 and specifically that focuses on at-the-money approach as opposed to the variance approach.
Yeah, I think that's a key consideration, the at-the-money approach. And we know Scott Nations, where this product is based off of his Nation shares. He initially wanted to launch that back with the ISC. Back in the day, they, of course, became part of the NASDAQ exchange group, and now CME and NASDAQ partnering to launch this product as a result. But one of the key considerations is kind of what you mentioned there, Tim, is that this is straight up at-the-money vol. It's kind of, if you want to think of it, listeners, it's the old school methodology of VIX coming back again. Back in the early days of VIX, it was just at-the-money OEX volatility. Then, of course, it morphed into the S&P 500 and later added the skew and everything else out there. And that latter portion, adding the skew, it certainly adds information, but it's become a very controversial point of late as well. In fact, a lot of the lawsuits surrounding VIX of late have been around what the impact of that skew is on the products. A lot of people out there, Scott included, have advocated for a while, just strip that out. Strip that out. It's just noise. We want to just look at the at-the-money vol, and that's exactly what these VOLQ products are looking to do. So we're looking forward, Tim, to seeing those go live soon so we can have you back on to talk about that. But we're not done with you yet, Tim, because you have another product category that's been, shall we say, a little bit active of late. We've been talking about this for a while on our Crypto Rundown program, but obviously these are getting pretty hot. In fact, I'm going to cheat, Tim, and I'm going to bump up some of our listeners. We got a couple of listener questions in this foray from our Futures Options feedback segment. First off, we got a question from Niels Petrockian, so maybe he's Neil plural out there. I like that. Niels wants to know, this question is for TWIFO. Well, you found the right show, Niels. He says, there's been an interesting uptick in the crypto futures at CME Group. Do you feel this article is correct in attributing that to the basis trade? I enjoy your programming. Thank you very much, particularly TWIFO and the Crypto Rundown. Thank you for answering my listener question. And he sends a link to an article. I forgot, he doesn't list where he pulled this from, but he talks about the record open interest out there in the crypto futures there, Tim. And they talk about how a lot of this seems to have been driven by the basis trade. In fact, they quote Joshua Lim, who was on our Crypto Rundown program in the past, from Genesis Global Trading, saying that the juiciness, he puts it, I like that term, the juiciness of the basis is what's fueling this record growth of OI out there in CME crypto futures and indeed options. Obviously, Tim, you got handed a couple of hot product categories. Catch us up. What's been lighting things up out there in CME crypto of late? And do you agree with our listener Neil's here attribution that it's the basis trade that's driving all this, or is something else afoot out there?
Yeah, it's a great question. Always love talking about crypto. It wouldn't be a TWIFO show if we couldn't get at least a few crypto questions in here. And I think there are a few things leading to the increased activity, particularly that we saw here in August. One is that the institutional interest in our Bitcoin suite at CME Group continues to grow. We've had just about 1,800 accounts that have been added this year. That's 40% more than were added in 2019, and we're not even through 2020 here yet. And we also had a record number of large open interest holders, which are those contract traders that hold more than 25 contracts. And that was at 94 large traders for the week of August 18th holding positions. And that was up almost 30% versus July. So that's great. When we look at the volume for the month, we did in the month of August, we did a little over 10,000 contracts per day, which is above the yearly average of about 8,000. And that's up 30-some-odd% versus full year 2019, which is phenomenal. But your reader, I kind of agree with the listener. Certainly a wider basis between the cash market and the futures has led to a higher futures ADV and a higher daily average OI, or people are holding futures contracts against potentially some of that basis trading that's going on. And I wouldn't necessarily say that it's dislocated, but the behavior between the basis is diverging in August. Crypto futures are still relatively new in the grand scheme, only coming up on the 3-year anniversary in December. We don't always have the best pattern or the best empirical data set to always judge against. but certainly the widening has attracted new traders, has attracted, I think, larger institutional traders as well. And then we reached a record OI of over 15,000 contracts back in August on the 17th, and we averaged over 13,000 contracts for the month. Now, as a reminder, our Bitcoin futures contract is worth 5 Bitcoin, so that's over 65,000 Bitcoin equivalent in terms of positions being held at CME for the month. Traded for the month. So it's great. Options also continuing to grow. We're up about 40% to just under 200 contracts for the month in August, and actually seeing a lot of activity today in Bitcoin options. So not sure if you guys have it up there, but trading over 500 Bitcoin option contracts today, including a 100 and 200 lot print on Globex, which is some pretty decent size in Bitcoin, given the price and the 5 Bitcoin multiplier these days. So lots going on, but I think the basis, yes, but I think more importantly, continued institutional adoption of our product by the marketplace, getting more people in there, increasing the trading velocity.
Yeah, I have it up right now here. Listeners, you guys can generate the reports. Now the TWIFO reports do include Bitcoin as well, so pull that drop down to cryptocurrencies, and you'll be off to the races. You can see exactly what Tim is talking about. Coming into showtime, Bitcoin having a bit of a rough week here, off 8.13% net on the week at about 10,685. So giving up a lot of the gains that it's had of late out there. A lot of people arguing back and forth about whether it's correlated, inversely correlated, uncorrelated. Had a great conversation about that on the Crypto Rundown earlier this week. Check that out if you are so inclined with our guest there. Today's movement may argue for a little bit of the correlation factor, but that's a conversation for another day. Coming on to showtime here, 400 lot of the 9,000, 400 total, I should say, of the 9,000 puts in December are leading the dance out here today. And again, that's, as Tim mentioned, that's a 5X contract, so that's pretty beefy. Also haven't seen a lot of love for the 9,000 strike in a while. Usually it's been, 10,000 and above, because Bitcoin's been well north of 10,000 for a while here. So seeing 9,000 back on the tape on the put side in September may be showing some folks have an interesting outlook out here. The most active month out here in the Bitcoin options was October. The vol out there, if you're wondering, 57 2/3, actually off a little bit in October, which is kind of interesting, coming in a little bit. And let's see, the skew. Last week, the puts were slightly cheap, 0.6% cheap. This week, they're almost unched with the at the money. So puts have gotten a little bit firmer out here, but not a lot. The calls were 2.3% cheap this week, 3.9% rich. So the calls getting bid. Puts kind of staying the same. The skew in Bitcoin has been a fascinating beach to watch. Again, if you listen to our Crypto Rundown show, you know that skew has been kind of symmetrical coming into this week. So interesting to see if that shape has held firm out there. Also saw some action on the upside in October with the 13,500 calls doing 340 contracts again out there this week, which again shows the volume ticking up out there. Actually, it looks like it was a vertical, 13,517. That's right. We talked about this on the show on Monday. 340 of those went up on Monday as well. So a pretty sizable vertical. Shows what a different, perhaps, thought range we were in on Monday versus now. Someone looks like buying a pretty sizable far out of the money vertical for thousands of handles out of the money. Now, of course, we're not quite threatening the 10,000 strike yet, but certainly well south of the 11,000 strike here at 10,700 even right now. Just ticked down again off 900 points even on the day. So a rough day here for the crypto bulls, but an interesting one nonetheless. Well, Tim, we hit all your product categories. Got to hit a couple more here before we get to some more listener questions. You're our guest. I will give you the pride of place. Where else should we hang our hat here on our TWIFO journey today, sir?
Oh, always a good question. I mean, it's always hard. I mean, equities is my favorite asset class, but, I don't know. I'm going to say dealer's choice, Mark. Wherever you want to take it, you're in charge. All
right. Well, making my job easier, I guess, then, because the downside is dominated by pretty much all energy outside of lumber, which we already said has done a whopping 176 contracts this week. So, unfortunately, we can't go to lumber, but we can hang our hat in our old friend WTI out there, which is number 4 to the dark side, off 5.99% out there. We talked nat gas before. It's moving a lot these days, but it's a much lower price contract, obviously, so it's a little easier for nat gas to have continued large percentage moves week to week. So we'll hang our hat out here in WTI this week as well. Coming into showtime, we're seeing our old friend WTI at about 41 and change, 41 and a quarter, off 4% on the week. Not quite 2 handles, about 1 3/4 points. So Again, we talked for a while here about how the options paper has faded upside north of the 40 handle. It has surprisingly, though, persisted and survived north of the 40 handle here until perhaps this week. We'll see if this sell-off can continue into the latter portion of the week and maybe carry us back below 40. Right now, 41 and a quarter here on that front contract. That has less than a day to go. But the action out here this week was in October. That contract has about exactly 2 weeks to go. So that one has pretty much exactly within our frame of reference for analyzing skew and vol. The fall on that contract is about a 34, which is kind of interesting out there. So actually, it's like coming in a little bit. Let's see. Moving out here to the skew, the puts on the October contract. By the way, the October contract also had about 40, almost 41% of the paper this week. So that's where the lion's share of the activity was. The puts were pretty bid last week, 9.6% rich. Again, people fading this north of 40 handle move. This week, the puts have come in a little bit. They're 7.1% rich. Last week, the calls getting faded, 6.8% cheap. This week, getting a little bit of a bid. They're 6.1% cheap out there. So interesting stuff here on the skew side. Not a huge move, but an interesting one nonetheless. And what was dominating the tape out here, it was the 40 puts, go figure, even money strike dominating the action. You know what? I actually take that back. 40 puts were very active in October, and October was the number one month, but actually we have to go out to Dees for the number one overall most active contract. That was the Dees double calls, the Dees 55 calls, doing about 17, almost 18,000 contracts. The lion's share yesterday, almost 8,000 on the tape, about 6,000 on Tuesday, and about 4,000 coming on the tape today. A lot of back and forth on this strike, so repositioning on the 55 strike. That's an interesting strike here, given that we have struggled to maintain north of 40 for a while. A lot of action on the double strike here this week, followed hot on its heels, of course, by our old friends, the OCC 40 puts, doing 14,500 contracts this week. The lion's share of that activity coming today. Go figure, as the sell-off is coming in here. Nearly 9,000 of that 14,000 and change coming today. The rest scattered throughout the week. The other big day being Monday, about 3,200 on the tape. Coming into today, it was a lot of back and forth trading, so we'll see what today's paper does for the OI, but a big print out there today in all things crude. Let's go really quickly and see if we can find any other interesting and or aberrant strikes on the tape. Out here in November, we did see the 36 puts pretty active, 5,200 of those going up here this week, which is an interesting strike selection. And let's go a little bit farther out as well. Let's go out here to May of next year. We've got the 65, actually let's go out to June. Let's go out to June of next year. We got the 65 calls doing about nearly 3,000 contracts this week as well. So it's not all fading and not all far downside here, listeners. There is some call activity to be found in the farther off contract, just not a ton. And if you want, this is the kind of paper we like here. If you want even farther out of the money, listeners, you know, if 55 or 65 is not far enough out of the money or not far enough down the expiration calendar, well, then we got you covered here. These 2022 par calls, the 100 calls on the tape today, listeners, 1,900 times this week. It looks like maybe a funky 65 par spread went up in Dees of 2022. Looks like it traded 840 by 900 times on Tuesday, and then again today, 1,000 times. So 65, 100 vertical. Interesting. Total of about nearly 2,000 contracts. Some scattered paper on the 85s and 70s too, but that's pretty small, 150 and 100. So if it's a spread, it's a funky one. But looks like today's paper is only on the 65s and the pars. So interesting stuff afoot out here. If you had that 65 par vertical, listeners, what would you rather do with it in Dees of 2022? Would you rather sell it or would you rather buy it? Let us know. Hit us up. I'm curious what you guys think on these funky, crazy spreads. Let's go really quickly since we're talking about craziness. A lot of ag heads out there as well. Let's see if we can squeeze some of you on the show here in our remaining minutes before we get to some more listener feedback. Let's go on out here to the grains. Once again, this time, soybean meal was number 5 to the dark side this week, or I should say to the upside, up 2.61%. Don't get a chance to talk a lot of soybean meal here on the show, so let's see if we can squeeze you guys on here in our remaining minutes. Soybean meal coming into showtime, 305.5 on that front future. They're up about 0.5% from Monday. So obviously a lot of that move came from last week's show on Thursday. The most active contract, by the way, does about 44,000 contracts a week out here. So pretty decently active contract out here. Looks like it was the DEES doing about 38% of the paper out here this week. The vol, and that about an 18.25, off a little more than half a point, about 2/3 of a point. So vol actually coming in this week. The skew on this DEES contract, the puts were 1.1% rich, so pretty much in line with the at-the-money vol last week. This week, nearly 9% cheap, so the puts coming in pretty hard. The calls, 4.2% rich in the DEES soybean meal contract out here. This week, 15.2% rich out here. Wow, that's impressive. So the calls bid up, and the puts are kind of cheap. That's interesting. People always ask us, where are there favorable collar opportunities? Just looking at nothing else, just looking at this skew move, maybe it's an interesting place to look for some collars out here. Cheap puts, pricey calls. That's a setup usually for a pretty decent collar. Let's see what was lighting up the tape out here this week. Looks like it's the 320s in DEES, so pretty far out of the money, about 15 handles out of the money calls that were dominating the tape out here. 4,500 contracts. That was the biggest print. Actually, even between today and Monday, about 1,300 contracts both days, 1,000 on Tuesday, and then we kind of drop off a little bit to go out to March, actually, of next year for the 320 calls out there. So 320 strike is where the action is right now in soybean meal. Clearly, that's where the paper is aggregating, because the 320s in March also doing about 4,000 contracts. The lion's share on Monday, 1,500, and about 1,000 today. The rest scattered throughout the week. So clearly, something is afoot out there on the 320 strike here in soybean meal. You a soybean meal options or futures trader? Hit us up, listeners. Let us know why so much paper is aggregating around that 320 strike out there. Most of the months here, we go out to all of next year, 320 strikes are where the action is as well. So interesting. Even though that's decently out of the money, 320 is where the action is right now. And also where the action is with you guys, as it is time to head into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. I mean, the whole show is your show, but this is where you get to dictate the pace here with your questions. You know where to find us, at Options, most of the major social media platforms, our website, theoptionsinsider.com. Just use questions at theoptionsinsider.com. That'll get us as well. In the live chat, if you want to get bumped to the top of the list, no shortage of ways for you guys to reach out to us with your questions and your comments. Tim, put on your question answering pants, because a lot more coming your way. We already touched on the one about the crypto futures. A similar theme here coming from Natalia. Natalia wants to know what's behind the increase in Bitcoin options volume. So we just talked the futures, but people have noted, and we have noted on our Crypto Rundown show as well, that we've seen the options volume ticking up there as well, Tim. Obviously, we just touched on this a little bit. What do you have to say for Natalia, who wants to know what's behind specifically the increase on the options side, sir?
Yeah, also a great question. I think it's largely the same story. It's the institutional adoption. We've seen continued new customers coming into the option product for Bitcoin, and also deploying more, I don't want necessarily systematic strategies per se, but certainly there's a replicability to the strategy those institutions are starting to deploy. They're more deploying option programs around Bitcoin, which has been great to see. So I think that's the largest driver. And then, like you said earlier, Mark, a few thousand point disappearing this week. Bitcoin remains a volatile underlying, which option traders love. So I think the combination of the two, as well as being able to trade at CME around the clock, the recipe for success and volume growth.
All right, next up, Sean, I think you're going to like this one from Celez. In fact, If you would like to do the honors, Sean, I will allow you to read this question here from Selez. Would you like to do the honors, sir?
I'm happy to do the honors. Selez asked the question, what's up with micro options on RUT? Great question. And, I think the theme of the show was micro options being launched by CME. And they started with, and I'll let Tim kind of follow through on this answer, but with the S&P 500 and NASDAQ 100 micro options. Client demand for micro options is out there. There's a real momentum behind this size of a notional product, and it's only enhancing the ability for not only for retail clients, but for an institutional client to just really get that hedge down to a minute detail. And it really, in these markets, there is a desire to get that close to the penny on hedging those deltas and getting that notional value just right. So micro options, there's a real strong demand for them. I'm really excited about it. And RUT is the SIBO symbol. So I'm also gonna mention SIBO's RUT products as well, and mention this to our good friend Rick Rosenthal over at SIBO Global to see what SIBO has to say on options on RUT. But again, a tremendous launch by CME this week, and couldn't be more excited for Tim and company in regards to their launch of micros, and just a fantastic success. So congratulations again, and I'll let Tim kind of expound on micros.
Yeah, thanks. Thanks. I'm certainly happy to kind of paint a little bit more color on that. We certainly heard from customers. They also want micro E-mini options on Dow and Russell 2, given the success of the future. And we'll continue to work with customers to figure out how we can get there. The challenge that we have really is just when you think about the technology and things like the market data and the quote traffic, we just want to make sure and be mindful that we don't overwhelm our customers, that we don't overwhelm vendors, and do it in a little bit of a step manner. So we focus on the two futures that are kind of in the first and second pole positions, and continue to figure out what's the best way to expand the micro E-mini options to the other contracts. So we'll get there, but can't necessarily do it all at once. So keep that feedback coming. The more people who want it, the easier it is for us to do it.
There you go. They say it all the time, client demand. You guys want it, hit them up or hit us up. We'll forward it along and make sure they know. At the end of the day, if you guys want it, and clearly you guys want all things micro these days, Tim, and I've said it before, but I'll say it again. When you announced kind of the micro future, I think it was back when we were down in Boca. It was you, me, and Tim, ironically enough, or you, me, and Sean on the show here again. And, it resonated with me. I thought it would be an interesting product, but I never really thought it would reach the lofty heights that we've seen out there. Has it been as surprising for you, just the groundswell of response to the micro future since then, Tim?
Oh, I remember sitting in a little enclave down in Boca, chatting, as three good friends.
Remember those days when you could go outside and see other people?
Yeah, and I had no idea, if I'm being honest. I mean, the micro futures volume and the enthusiasm and the excitement of the options all surpassed my wildest expectations. When we were getting together, I knew we were on to something. I thought they would be good, but to put these numbers up so early and to continually put them up, where even if you look at something like the micro contract, we're trading between 1.6, 1.7 million contracts now for 2020. They've maintained their elevated volume even after that pop in volatility in Q1. So the fact that they're still trading these numbers and putting up these type of records while the markets are a little bit calmer is also equally, if not more, surprising, which I think just speaks to the testament. These serve a great need in the marketplace, and the people love them. Sometimes you got to give the people what they want.
Speaking of giving the people what they want, we'll round it out with this one here. It's like the name, I like the handle, Paprika Chef. I'm guessing he likes a little bit of seasoning in his cooking. Paprika Chef says, do you have any updates on the return of the OIV crude oil VIX? Thanks. Well, if you like that, Paprika Chef, check out the conversation I had with Ariane Cricky over there at SIBO. That was a joint SIBO CME index. It wasn't a product. It wasn't tradable. You couldn't go out and trade. OIV, of course, listeners, was the VIX of WTI. So it's kind of a joint collaboration applying the SIBO VIX methodology to a CME product. WTI, of course, we saw what happened with negative futures there earlier this year. Those methodology doesn't really work well with a negative future. We haven't really seen it return since. I asked them about it. They said it doesn't sound like it's coming back anytime soon. So, Tim, I won't put this one to you because I know this is outside your product category. But we have been getting a lot of people asking us about this. So maybe next time we get the energy folks on here, Pat Preekert, Chef, I'll put it to them and see if they have any specific timetable for either the return of OIV or maybe some other analog of it, maybe some other new thing coming out of CME that will approximate what OIV used to do. Because I'm with you. It was a great benchmark for crude volatility. If you just wanted a snapshot, people are asking us all the time, what's a great little, easy rule of thumb and easy guide and easy estimator for crude volatility? I would always point them to OIV. I was less of a fan of OVX, which was the VIX of USO, because USO has a lot of inherent issues I'm not a huge fan of. But OIV, that was the straight futures option. So the VIX of that was a kind of much more meaningful and useful number. So if that doesn't come back, hopefully we'll see some sort of analog or something similar come out of CME in the near future. All right. Unfortunately, we're going to have to leave it there. That's an hour just flies by, and we were talking all things micro and equities and soybean meal and everything else that made it on the show, crypto today, a whole bunch of fun stuff. But Tim, you're our guest. We've already hit on a lot of the stuff you guys have up your sleeves for the foreseeable future. But if you want to leave our audience with any other hints, any other teases, what they can look forward to from you guys on the equity and indeed the crypto teams in the coming months, now is the time, Tim. The floor is yours.
I think, nothing new to announce yet, but, lots that we've rolled out since last time we spoke, and there are a few more things on the horizon with VOLQ coming up. So I'll get the team to work on something, Mark, because I got to get back in this hot seat, more frequently than usual. So we'll drum up something, and I'll be back for sure. We'll
have to christen it the honorary Tim McCourt hot seat in your absence there, sir. I'm sure the rest of your colleagues will love that. All right, and Mr. Sean, the same question for you, sir. You guys are always cranking away on interesting new things, new endeavors, new partnerships over there in FTSE Russell land. What is on your radar? What's up your sleeve? What are you cooking up for our listeners these days, sir?
Well, first of all, Mark, it's always a fantastic pleasure being on the show, so thanks once again. And Tim, always great to have you on the show. It's just always a fun conversation going back and forth with you on what's going on in the marketplace. So just great to have you on the show. And, get your dates in with Mark soon because, there's a bunch of CME products, other asset classes that are dying to get back in, the energy folks, the metals folks, the rates folks. So get yourself locked in so that we can keep you in the hot seat a little more often. So again, great to have you. One thing I wanted to mention really quickly is we put out a nice webinar yesterday on the FTSE Russell website. And Mark, I think I've already sent you the link so that you can blast it out to your fantastic listeners. But it's a global market outlook, and it's kind of a look at trends on a global basis. There's discussion on risks regarding the U.S. election, us being an election season, Fed actions, and how they are interpreted by investors in the marketplace. There's a nice piece on the U.S. market versus the European and Asian markets, and just a really nice global outlook by our Philip Lawler, who is our head of global investment research. He does a fantastic job, and he's a real captivating speaker. So I recommend you folks click on that link and listen to the. It's probably about 20, 25 minutes long. It's actually really interesting. So I will end with that. And again, Tim, great to have you on the show. Mark, thank you very much.
There we go. Check out the webinar. We'll tweet out that link for you there, listeners, if you missed it. And on behalf of Sean and Tim and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting in our polls. We love to see all of it. Keep it coming. Remember, if you like what you hear, keep those reviews coming in your platform of choice. We've seen so many new people discovering the program and indeed the network in these troubled times. We want to keep that flow going. It's more important now than ever out there. People have a reliable source of information on these markets. So if you like what you hear, leave a review on your platform of choice so new folks can continue to discover these programs. And we'll see you back here tomorrow, noon Central, back to the old time there for Volatility Views. We kick it all off again on Monday with the old option block all the way through to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.